What's up, everybody? Happy Saturday to you. This is another video for informational purposes only. It's not advice to buy or sell stock or option. It's just strictly information. Let me go over the two trades that I did this past week. And I had some technical difficulties yesterday, but I'll get into that. But the first trade I want to get into is Uber. Uber, remember, every bar represents one period of trading, time period of trading. In this case, I got a signal here. Remember, the yellow bar indicates a sell signal, and the blue bar indicates a buy signal. But I wait for a particular lineup in 2 out of 3 of the intervals to suggest a high probability trade. In this instance, I got the sell signal on the daily as well as the 2-day. So the 1 and the 2-day lined up. That's a lineup, so that's a sell signal. I got into a position, let's see. All right, Uber. I got in it at $59, $62.60 with the commission cost. Ended up selling out of it at $200 with the profit of $134. I should have been in 2 contracts, but I forgot to change the quantity because typically, remember, I keep my cost per individual contract anywhere from between $100 and $150. So I could have purchased 2 of these, and I would have had $120 into the trade. But again, I didn't change my quantity, so it got me into 1. So this trade was a winner, and the next trade was Gamestop. Now Gamestop, hold up. First, let me go back to the Uber trade just to show you what it did. It got me out the very next day. Let's look at the strike price. The strike price, I was in the 55 put. Let's do this. Okay. These are the strike prices. Remember, these are the prices where people are betting where Uber will go. Calls mean that you're betting for it to go up. Puts mean you're betting for it to go down. So let's go to puts. Now, let's look at the close. Look at the box here when I highlight the bar. It closed at 56.11. So I bought the 55 put. So basically, I was betting that it would go down $1 and some change. And it did. The next day, it actually went down $3. And it got me out at $200. So that was a winner. The next trade that I did was on Gamestop. Now I bought Gamestop on Wednesday as well. It was at $124. And the prices of these contracts are so expensive because of the volatility factor, because it's highly volatile. These contracts are expensive. So I wait for it gets to a comfortable price, something that I'm comfortable with. And it did that, and I bought the, I'm going to say the 85 put. I bought the 85 put at $140. Now if you compare $140 compared to $59, you see the difference in pricing. But in this instance, the 85 put was what they call way out of the money. If GameStop is at $124 and I'm betting that GameStop is going down to $85, Well, let's see. You're talking about a 30% drop. A 30% drop in the stock to hit my strike. But as we know, with GameStop, it will move $20 per day. Right now, they've been bidding it up still, and this trade was a loser. So I lost a whole $140 on this trade. Now let's look at the numbers. Let's go to my numbers. Right now, based on those two trades, my win percentage is at 38 after 8 trades. Gross 270, negative 275. Net P&L, net 318. And you can see my payoff ratio and expectancy is still in the negative. This is after 8 trades. My equity curve had to bump up based on the Uber trade, and then went down based on the loss for the GameStop trade. Now, had I been in 2 contracts on Uber, like I'm supposed to be, like I should have been, let's say that, the win percentage would still been the same, but you would see my equity curve would have looked different, and I would only be down net 134. But again, mistakes happen, so we're just gonna move on from that. But let me explain to you the signals that I got for this week. Now, what you're gonna see coming this week, and I think I'm going to do videos when I actually go into my trades, and I'll be doing several trades per week. This was kind of like an introduction to what I'll be doing, but I'm going to be risking anywhere from $1,000 to $1,200 per week on multiple trades. Like I may have 5 to 8 trades per week that I'm putting money to or trading it. You know what I mean? So you're going to see a lot more activity, and I plan on making videos daily when I get into the trades and when I get out of the trades, and then do the weekly videos to kind of like recap and go over everything. But let me show you this. Like you see these bars here, the blue indicating a buy signal and the yellow indicating a sell signal. Over here, these are my indicators that I have coded, if you will. And when I get these checks and these dots, they indicate a possible buy or sell signal. Of course, red means sell, green means buy. So it's basically showing you the buy and sell over here as well, but just in different colors, and it's giving you a check and a dot. So look at this. I was looking at all of these trades, and again, remember, I try to get a line up. Like with Amazon, there's a buy signal, but the daily isn't lined up with it, so I will wait on that. Alibaba's a buy signal, but it hasn't quite lined up yet. I will wait on that. But one of the trades that I was really looking at was, I was looking at GameStop again. Here, you see this lineup? So I was looking to buy another put on GameStop. Let's look at the price. When I looked at let's go to the next week. Okay, March 12th expiration. That's next Friday. These are look at the price of these contracts. Look at that. GameStop is at $137. For you to bet that GameStop let's just say, would go up to $150. That's $1,400 you will have to lay for this contract, for that bet. I'm looking at a put contract. These checks here, these are the prices that I'm comfortable with. I have it programmed to show me the contracts that's within my price range. So again, I would be looking at the 80. The 80 is what I would be willing to lay. And I tried to execute this trade, but again, I had technical difficulties where the brokerage did. So I couldn't get into this position. I couldn't get into sundial. You see, I got a buy signal on sundial. There's a lineup. And BlackBerry. Now, all of these are Reddit. The Reddit community, if you remember, all of these are trades that the Reddit community had blew up. You know, they were constantly buying and selling, and it raised the volatility, and the price of those contracts was crazy. So, hopefully on Monday, I'll be able to get into these and some more. So, I'm looking at BlackBerry as a buy. I'm looking at Gamestop as a sell. See the lineup, the daily with the weekly. And I'm looking at sundial. Sundial, the contract I was looking at. And see these. Let's look at these contracts for sundial. Look at the strikes. It's $1 stock. So here are the strikes. You got the dollar. You got the $1.50. The $1.50 is what I would have been looking at. So already, that would be slightly $5. That's what that contract. Look at the volume. 7,000 people. 7,000 contracts traded. I'm sorry. 7,000 contracts traded on this strike already. People speculating. So it expires Friday. We'll see if I'll be able to get into this trade on Monday. And I'll make another video to keep you posted. All right. Thanks for listening.